Good morning and happy Thursday. This is Don Chakowski, the Director of Channel Sales with Fidelity National Title, and we are excited to bring this week's Market of the Moment. You guys may have noticed there's only 4 of us on screen, and we're usually starting off with 5 or 6. But this week we are flip-flopping things a little bit, and we are going to start off with our market update, and then we're going to be looking at a video talking about some of the activity we're seeing with some of the institutional buyers. And then later we'll be joined by Dan Noma, who is buying for a lot of these folks, and he'll be sharing what's going on in that world. So we have the usual cast of characters this week. So Mindy, thank you so much for joining us each week, and we're always excited to see your smile and hear the great news you're bringing to us about inventory every week.
You set me up, Don, every week.
I know, I can't help myself. And probably people are like, yeah, really, Don, this is going to go well.
The pressure is real.
I'm trying my best, I promise. I am trying my best.
And we know you are. So but thank you for making the time for us each week. And then we are also joined by the Vice President of Sales for Fidelity National Title, Ms. Sharon Terhune. Good morning, Sharon.
Good morning, everyone. Good morning, Don. Good morning, Mindy and Amber. And thanks, everyone, for joining us.
And we are also joined, and we're going to start off this morning with the mortgage update, but Ms. Amber Kovarik, who's the branch manager of Guild Mortgage over here in Chandler. Amber, thank you so much for each week. And I know that last week we let you have the week off, right?
I did. I was on vacation.
Nice. Well done. All right, we have to share the vacation pictures in a little bit.
Okay.
But well, thank you. And Annette does a great job, which she's here filling in for you on those weeks, and we appreciate you making those arrangements each week as well. But we love it when you're here, and so what's going on out there as far as mortgage rates go? I've seen some news stories. You've been talking about how we're sliding back down, and so what's it looking like?
Yeah, so yesterday was a big day because we got the commentary from the Fed meeting. And last time we had this, Chairman Powell really freaked the markets out, and we saw interest rates go up very quickly. And so this time he was very careful in his comments, not painting too rosy of a picture of the economy to not spark that sell-off again, causing interest rates to jump up. So we really have kind of like maintained. We're seeing a little bit of a sell-off this morning, but nothing like we saw after the last Fed meeting. And really his comments were good for interest rates, saying that there's really no signs in the near term of him tapering of the asset purchases, the securities that he's purchasing to help keep interest rates low. So that was probably one of the biggest things the market was looking for, is signs of them tapering that sooner than they were expecting. And then they talked about inflation, and anyone who owns a bond, inflation is that arch enemy because it devalues that investment. And so they're really watching that. And he said, you know, he's going to wait for inflation to exceed that 2% target for some time before they look to potentially taper off or start to curb their current monetary policy. And so it was good to say we're going to keep things as is, we're on the right track, and we still have a long ways to go to get where they want to get to. And so although we are seeing improvements in the economy, we're not there yet. And so I expect that we'll see interest rates stay sort of in this level and maybe even go down a little bit. Today's going to be a big day to see if we can hold this level that we're at, which is the 50-day moving average. So if we can hold that, may see interest rates drop just a little bit further than they are right now. So great time to be buying since we have had this slight decrease in interest rates. Obviously, they've been low this entire time, but this little dip has been a nice reprieve.
You know, I think it's so important to keep everything in perspective, right? That when we've talked about increasing rates, we're talking about increases from record lows, like things that have never happened before, right? You know, so when we talk about them decreasing, you know, that we're still in those areas where these are numbers that haven't been seen before as far as interest rates go. And so whether you're getting that lowest possible interest rate that anybody's ever seen, or you're a little bit above that, you're getting a really good deal on money.
Yes.
And so, and then, when we talk about what's happening in the market and the inventory shortages and the extremely high demand and the appreciation that we're seeing in homes, those little variables in mortgage are truly offset, right? That's by the amount of money, if you're paying a quarter point or even a half point higher than what you were hoping to be paying, the way things are going right now, the appreciation is offsetting that so quickly that that you are, when nobody can expect this to stay like this forever as far as the appreciation rate goes, but still appreciation, right? Just not at the same 3% per month that we're seeing right now, which is just crazy. But
yeah, I think Phoenix topped the charts of like highest appreciation in the country. So I mean, it's an incredible time to be buying. So it's like, when is the right time to buy? Right now, so you can jump on this appreciation train and just make sure you've got a good strategy in place for how you're going to win in this market and how you're going to compete. And the most important thing I think for a buyer right now is to make sure they're working with a realtor that knows how to win in this market, because it is one of the hardest markets I've seen in my 20 years in this industry. And it takes a serious level of knowledge to know how to manipulate, to work in this market and to manipulate with these just incredible competition. So
yeah. So what about some of these government-backed products like FHA and VA loans? What are we seeing for those folks out there? Obviously, these numbers aren't even reviewed again until the end of the year, right? To do any kind of increases on the limits for FHA or even conventional buyers.
Yeah.
So with the prices going the way they are, what type of solutions are we looking at to help those people who are looking for that lower down payment or on VA? I hear stories often about how VA buyers can't buy because they're being frowned upon in a competitive market. So what, from a lender perspective, are some options that those folks might want to pursue?
Yeah, VA buyers are definitely being frowned upon, which is a shame because they shouldn't be, just because they're doing 100% financing. But I mean, on a VA loan, we can go up to 100% financing to $1 million. So it's crazy. So I think that just helping the seller to understand that the buyer is still well qualified and doing any kind of appraisal waiver on a VA is the way to make them have an even playing field with a conventional buyer. The seller's biggest concern is, or the listing agents is, they're doing zero down and they have no money, so they can't make up a gap if it appraises low. So if we can waive the appraisal, then go for it. And VA is the best one because they don't have to put any money down. So any money that they have or can get as a gift can all go towards an appraisal gap. And so I think it's just lots of talking to listing agents and helping them understand the strength of the buyer.
So, and then Amber, can you tell us some of the things that you and your team are doing to help the buyer's agent be successful in winning with the buyer? Because we all appreciate how difficult it is right now in general for a home buyer. But so what are some of the tricks you guys have up your sleeve to help people be more successful?
Yeah, so the first thing I think is just taking the time to talk to them about the market and make sure they understand how competitive it is, and probably reiterating everything that the realtor is saying as well, but just having it come from us and saying this is what I'm seeing come across my desk as a winning offer. This is what it's taking to win right now. And the first thing we're going to try to do is see if we can waive your appraisal, and this is why we're going to do this. And I just help them to understand that just because we're talking about appraisal waiver doesn't necessarily mean they're buying a home that isn't worth what we're paying for it. But it's a tough market when it's going up 2 to 3%, and then an appraiser's looking backwards to come up with their value. And so if there hasn't been comparables in the last couple weeks that are very similar to our subject property, the appraiser only has so much data to use. And so if he has to go back 30 days, it's already not relevant to today's pricing. And so I'm just explaining to them that the gap is not necessarily you're overpaying for the property. There's just not the sales at this time to support it. But in 30 days, there could be 3 more sales that now all support your price, and you're right back to the value of what you paid for it. And so it's like we have this gap in time, so we need to have the strategy to help make up that gap. And we're having a ton of success with showing people how we can use a mortgage insurance product to help make up that gap, and just taking the time to educate them on it, I think, is where we're having the most success in helping our agents, and calling the listing agents and texting the listing agents and sending them a video and making sure they know that we're in it. You know, I just had one that we won over the weekend, and it was Friday night, and I thought my team member was at the gym, and we got the CC that, you know, the offer was sent over. So I called the listing agent real quick, and he was like, oh my gosh, I just got off the phone with Kara on your team. And I was like, oh, I thought she was at the gym already, and I wanted to make sure I called. And he's like, I've never had 2 people from the same team call me about an offer. He's like, you guys are clearly like on top of this and in it. And they took our offer, you know, over 25 other offers. And so I think it's just still a people business, and we still just need to do everything we can to show them that, like, we are committed to this happening. This is solid. We're starting to put all of our clients into underwriting at approval, so that when they go make an offer, we can tell the listing agent we already have an underwriting approval, so we can close faster and we're solid. And creating like a new cover letter to go to show them, hey, this one's already been through underwriting, not just AUS underwriting, like legit underwriting, you know, conditional approved. So lots of things, and it just continues to evolve. Like, how do we continue to up our game to help our buyers have an unfair advantage out there?
Excellent. Well, and I think it goes back to, and this should be a perfect segue for Miss Mindy over here, but who you works with matters, right? And you know, we hear this a lot of times from people who are working with people who aren't. It's not that they're not professional, not that they're not, but they just don't have the experience in our business, and they're not surrounded by the people who do. Who are looking, you know, maybe they're a part-time agent and they do other things, and you know, and I can tell you, I know of a couple of part-time agents out there who work other jobs and still do real estate full-time. So I'm not trying to disparage anybody out there, but what I'm saying is that there's somebody who knows this business and is familiar with all of these things that go into play when somebody's going to buy or sell a home. So that said, Mindy, I know you and your team are just constantly studying of how to make sure that you can help your clients in the best possible way. So I guess before we get into the market update, the things that Amber was sharing, like, what is it that you take from that to make sure that your buyers and sellers are having the best results possible?
Yeah, it's definitely a skill-based market, and it's full of strategy. Everything from, you know, when we actually market coming soon property. So we used to, as soon as you'd get a listing, you'd do coming soon marketing, and you'd want to get the word out there. And while you're prepping it to go to market, you'd be blasting it everywhere. Well, right now, I don't put anything coming soon until almost the moment I'm about to make the listing live, because so much can change with values in those 2 to 4 weeks before we go to market, that I don't want to put my sellers at a disadvantage. So we've got another listing that's coming live tomorrow, and we just went through a final pricing strategy call this morning with the sellers. So that's part of how we evolve in our business based on what we're seeing out there in the market. And if you don't have a team or that's well connected enough to the market to be able to feel those ebbs, those flows, to understand what they need to modify and process to be able to get their clients the best, you're going to be missing out. And unfortunately, there are so many agents in the business right now because it seems like easy money, although it's probably the hardest time to be in the industry right now. But there's a huge gap in skill set. I mean, I did a lot of research for another listing that we have coming live with some active and pending listings to see where they actually ended up, right? In the old days, if you had a listing that went under contract the first weekend on the market, you could almost assume it was somewhere around the list price. So that just helped with your pricing strategy. You didn't necessarily need to talk to them. Right now, that list price could be $50,000, $60,000, $70,000 less than where they actually ended up. So you've got to have those conversations. And often when I'm reaching out to agents, One told me this morning he put a listing live yesterday. He won't be back until next Wednesday. And that was just the response. There's no one to talk to. There's no, I had another one. The square footage was wrong in the MLS listing for their lot size. So I reached out and let them know that. And they were sort of irritated. I mean, there's such a lack in building relationships. There's a lack in communication. There's a lack in skill set. And definitely who you work with matters. I mean, Amber can give you time and time again, times that we've won deals together, and it's because of the partnership, the communication, and the strategy. So, when we look at what the inventory looks like this morning, we've got just over 4,200 homes on the MLS. Again, keep in mind, some of those are outside of your 17 major metropolitan cities. So we're really dealing with far less than that of what's actually available down here, kind of in your Maricopa area. That's down from about 4,700 this time last month, about 14,000 this time last year, and about 18,000 2 years ago. So we're definitely not trending in the positive direction. Amber's right. We did top the country in appreciation. And part of that is because we still have some room to grow. New construction really is a big piece that's going to help us come out of this. And we have the ability to build out here versus some cities where you're going to start to see, I think, some landlord takeover, similar to what you have in New York, right? Where the landlords really run the roost, right? It's like the rich buy and everyone else rents. And so, San Francisco and Austin, I think some of those big cities, you're going to start to see a really push towards that. And for us, we've got a little more run rate because we do have some room to build. I know later we're going to talk with Dan Noma. We'll talk a little bit about what's happening in the iBuyer space. Arizona is ground zero for, really creative lending solutions with how to help investors buy in a market like this, help options for people to buy before they sell. I mean, the beauty of such a challenging market is we're also a place that everyone wants to be. So the tech companies are really using us as a guinea pig for some of their products, and not all of them will work for everybody, but I know our team is constantly scrambling, trying to get all the information on all the programs so we just have them available, because the opportunity for people to buy in this market is so great. We have to figure out how to overcome those challenges for them, because it's just not something that they're going to be able to see or do again. But as far as new listings coming to market, the numbers are low. And I think, the iBuyer community or the institutional investor community over the last 5 years, again, Arizona being ground zero for them, they picked up a big chunk of that affordable, if you will, price range inventory, and they didn't put it back in the market. It's rentals, it's being held, it's being renovated, but it never made it back to the market. And, maybe when the stock market shifts, or maybe when there's if the stock market makes a plummet, maybe people will want to take money and put it into that. Maybe that will help bring some of that large groups of inventory back to market. Hard to tell, but between that and under building, we're just so far behind in being able to keep up that this is something that's going to take some while to unwrap.
Yeah, I definitely think so. And so Sharon and I had lunch with Dan yesterday, actually, and and we were talking about some of this and how, like, when these institutions buy these homes, especially the ones that are buying to for REITs and to turn them into part of their portfolio, they're gone forever. They are not coming back to the market, and
that's right.
And some of them have changed their buyer strategies as well to not only. So it was interesting because we've seen this for years now, right? We've seen years of them coming in and buying homes and different levels of demand and different levels of purchase price, but in order to be competitive, because they feel the same pinch that everybody else is feeling, right? Because they're out there trying to buy houses, and so if their offer is not the highest and best, they're not getting accepted either. But one of the factors that they haven't historically used was appreciation. So everything was just based on the asset and what it'll rent for and what we would see as a result. And now we're actually starting to see some of them factor in appreciation and what the long-term value is going to be of that property. And so that's affecting their ability to make better offers. So,
and I think they'll decide through that process, just like individual homeowners or investors do, how that impacts their strategy, right? I mean, real estate is always a good investment from a buy and hold perspective, right? We know that rents will continue to rise, so if you're going to hang on to the asset for a while, but I think, you know, depending on how long this rapid rate of appreciation continues and they start to factor that into their buying, they may decide that that chunk of properties that they bought within X period of time, those they're going to get back up on the market before they have to realize any other costs associated with them, because they more than enough made their money that they needed to make, and then be able to put that back into something else. So I think the strategy conversation will continue based on how this appreciation plays out.
Yes, and one of the things we're going to talk with Dan about when he joins us is about the opportunities around all of this, right?
Right.
Because it's one thing to look at this from the perspective of, look at all of this that we've lost, right? So we have now these homes are gone out of our market. We don't have that inventory to sell anymore. And now we're competing with these institutions that have billions of dollars to spend and are typically paying cash. However, there is opportunity for our buyers and sellers as a result of this, and there's an opportunity for our agents as part of this as well. So I just want to plug a little thing that Amber and I have coming up at her office. And Amber, I believe we are set for the 12th of this month. I'm peeking at my calendar real quick just to make sure. Yes, so at Amber's office in Chandler, we are doing a call frenzy. And we've got a couple options for people. And the idea is around this call frenzy is to generate more listing opportunities. So imagine this, though. Imagine that if you had a list of people who were likely to sell their home, and that you have the phone numbers and email addresses for those folks, and calling them and having a conversation about what our market is right now would be amazing. What if you could even take it a step further and have an offer on hand for them of that property? So and that's what we're going to be doing on the 12th. Is we're going to be reaching out to those folks. We're going to be doing script practice. We're going to have a good time with it. We'll have some music playing. Maybe we'll do some dances. I don't know. But what we will be doing for sure is providing people with some amazing data to reach out to likely sellers and have an offer on hand. And so if you're interested, if you're watching this and you're interested in participating in this, shoot me a text. The phone gets a little rough sometimes because I'm on things like this, and to be but if you shoot me a text or if you Facebook message me or what have you that you'd like to participate in this, we would love to have you. And actually we'll give you a couple of different options. One is, if you just want a neighborhood list of likely sellers, we'll be able to work that list as well. Can't guarantee I'm going to have a lot of buyers depending on the neighborhoods that you select. But if you want a list of homes around the valley that we've got offers for ready to go, I did this yesterday, and I had a list of 250 properties that we had offers ready to go on that we were calling, and we got a few appointments set as a result of it. So, yeah, go on, Minnie. Sorry, you ready to say something?
I think the key here is in the conversation that we're having with people, because when we look at what the new listing count is coming to market, every month it's lower than the month previous. And it's certainly lower than the previous year, while the purchasing is higher than it is in the previous month and certainly higher than it is in the previous year. So the issue is not that there isn't a healthy enough demand for people to buy things. I think the issue is that there is an emotional and logistical challenge with how it all works. And so sometimes calling and telling somebody, I can sell your house in 5 seconds and I've got 57 offers for you, I think it's causing some pause and some anxiety for people, unless you're the subset of the population who doesn't have kids or doesn't have dogs, or we have clients like this all the time. They're very mobile. I'm like, where are you going to go? They're like, we don't care. And you're like, okay, that's great. Let's sell your house. Super easy, right? Like, let's do all the right things. Let's get you the most money. You'll go in a rental. You're the one that should be moving right now, right? The other ones, the impact to their family is going to be so great from a financial perspective. We've got to help them get there from a logistical perspective. And we don't want them opting out of the market just because they're afraid of it. And so I think it's really important that we're having these conversations, and that does take being proactive, because when people are afraid, they don't do anything, and they certainly don't reach out to have a conversation about it. So that's why we have to be getting on the phone and calling people, and we have to be starting with, what could the move do for them? What could the money do for them? And is it selling your house, or do you just need to get the money? And then with that money, what could we do that could be life-changing for your family? Is it a move? Or would you like to own your first rental property that you didn't know how that was even possible to do, and create lifelong changes for your family because of what's happening in this market? I mean, I think those are really the conversations that people need to be out there having with their clients, with strangers, I got a new client. I had surgery a couple of weeks ago. The tech that did the ultrasound on me when they put the PICC line in, we got a new client from her. And it was because I just had a conversation with her. I wasn't trying to sell my house. I wanted to help. And I heard from her the panic and the fear of what's happening in the market, and wanted to be able to help, right? And it's like, if you're coming from that place of contribution, there's no bad news about the market right now. What an opportunity for people.
Mindy, I think you said it perfectly of what, just to circle back around even where you started, with how important it is on who they're working with today, because that communication, that story on who they are, there's still what, 60, 70,000 licensees, I don't know, something to that nature in Maricopa County. Do you foresee that adjusting and maybe seeing that go down? Because I feel like, it is harder. It's harder today because you do have to be the Mindy Jones of the world that knows how to talk through with their clients the best options and what to do and how to move forward. Others are, they're just eating out inventory, really, is what they're doing one by one, right. And it doesn't make a lot of sense.
I haven't looked at the month-over-month changes in real estate licensees in and out, to be able to give you something based on data. I can tell you that I thought going into this year that we would see a lot of agents who would want to join teams because they would see the value of the branding, they would see the value of the infrastructure, they would see the challenge in the market and want to find the best environment to be in. Right. And I don't know that I saw that as much as I did. And I don't know if that comes from a fear-based perspective from the agent of, I won't be able to do as much business in this market because it's challenging. So I don't want to be on a team where I might have to give part of that paycheck up, even though the net at the end will likely be less to be doing it on your own versus what, So right. I would have said that this would have reduced the number of licensees. It would have increased the consolidation. And I don't know that I've seen that as much as I've expected. And it may change going into the next year, because I think, your first year, right, you can think of probably 3 to 5 people who you could help. And so maybe after the second full year of being in this type of a challenge, maybe we'll see it more then.
Well, this just came up in a recent conversation too, that, like if somebody, was on a team and left the team and didn't do as successful, that they just don't come back and say, hey, listen, I want to come back, which is too bad. Because,
totally.
they can, there's no shame in going back, hey, well, I tried it, no worries, there's no shame in that, and there shouldn't be.
No, and I think good team owners, everyone is a leader for a different reason. To me, I'm a leader for the purposes of my teammates being successful. I will be successful through their success, right? And so my whole goal is to build them up. And being an entrepreneur by nature inevitably means at some point you're going to want to try it on your own. That's the nature of who these people are, right? We take 1099 contractors and we stick them on a team, right? And so there's an inherent disconnect there, right, from people who wanted to guide their own way. So I think good leaders understand that. And this absolutely should be a time that we're banding together to help support our families, to make a bigger impact on our community, to educate the agents like the ones that I talked about, that there's a better way to do business, and certainly some education for our clients that not all representation is the same.
Agreed. Well said.
Yeah, excellent. So, okay, we're gonna pivot here a little bit, but first, want to make sure David Fuller's out there giving us our props. So we love you, David. So so okay, so I'm going to play a video that is an interview that Sharon recently did with Dan Noma, kind of talking about what we're seeing with the institutional buyers and some of these Wall Street buyers that are purchasing here in Arizona. When we wrap that up, should be right about the time that Dan is joining us, and poor guy he's going back to back. He's fitting 2 Facebook Lives into one time frame today, so we appreciate him whittling out some time for us. But we're going to check this out, and if you have questions, if you're watching this live, throw them in your comments, and we can make sure that we share those with Dan when he jumps on. So here we go.
Hi, I'm Sharon Terhune, the Vice President and Sales Manager for Fidelity National Title, and I'm joined here today with Dan Noma. Dan is the owner and founder of Venture REI Real Estate. Dan, can you tell me a little bit about Venture and what you guys do there?
Sure, yeah. Our core business at Venture REI is we work with big institutions, private equity groups, publicly traded REITs on the acquisition of single-family homes for rent. So that's, while we have a bunch of different arms of the business, that's always been the core of our business, is working with these big funds and their acquisition of homes that they're going to rent out.
Right. Well, can you tell me a little bit about a REIT and what that is and what that looks like?
What's a REIT, right? What the heck is this thing? So, a REIT is it's a publicly traded fund that buys homes, and basically what they are is just big property management companies, right? So the simplest way to think about them is that they've got this machine that buys homes. So that's us. We go out and we buy all these houses. Once they acquire enough homes, now they're getting rental income and they're getting management fees.
Oh, wow.
And those management fees are so high enough that they're profitable, and then people like you and I buy their stock because it becomes like a profitable business. And so typically we see them go public, like in these funds, when they get about 20,000 doors nationwide.
Okay.
Phoenix has always been the hotbed of this, right? So this is
we always are. It's crazy.
This is where it all started. So I think back like 11 years ago, it was the first time I'd ever even heard about an institutional REIT, and there was not a single family home REIT in Phoenix at all. And we're lucky enough to have like the founder of this, grew up in Mesa. Like he created this idea in Invitation Homes, and so we started buying houses, and I thought he was crazy. I'm like, dude, this is not going to work, man. There's no way this is going to happen. 2,000 homes later in 2011.
It worked.
Yeah. And so that group they're on their 7th fund. So they've gone public 7 times now to do this and rinse and repeat. So when they go about this, right, think about this like, maybe they raise $7 billion, right? So they spend and raise $7 billion to acquire a fund. They buy all these houses. That takes 24 months-ish, something like that.
Okay.
Then let's go to Wall Street and sell this fund.
Yeah.
And the last time someone did this, the fund was exactly that. They spent $7 billion. They sold it at Wall Street in a single day for $11 billion.
Wow.
Right, so do the math. They got all their money back.
Those are some good numbers.
Plus, they've got $4 billion now to recapitalize and go out and do it again.
Smart.
Right, so they're playing on house money, right?
Yep.
And I think that's the big difference. So there's a lot of value in these guys, and they're here, right? So I think now in Phoenix, we're almost 8,000 doors across Maricopa County that are owned by institutions or owned by publicly traded REITs. Yeah.
Wow, that's great.
Yep, big deal.
So Dan, tell me a little bit about what's the appetite in Arizona.
Yeah, well, all of a sudden, so like if you'd asked me this in March of last year, I would have probably told you that the world was coming to an end. I think we all kind of thought that was going to happen.
Right.
But now, like looking forward, the stock market has improved dramatically, right?
Yep.
So all of these groups, being that they're publicly traded, they've got all of this new capital.
Okay.
So now that their stock prices increase, some of them like 20 to 30%.
Right.
So what do they do with this money, right? Now they can't just park it. They can't just sit there and, maybe go buy other widgets or other tools. Like they want to buy tangible assets. And so the best tangible asset in the world has always been real estate, right?
Yep, absolutely.
And so the idea of some of these groups, like the group that we represent in Phoenix is Starwood, right? And so Starwood is massive. They own all of these hotels. Like, are you a member of the Starwood's reward program? Probably.
That's why we all knew who they were, right?
Yeah. So that's just one arm of what Starwood does.
Right.
But they have a fancy office in Scottsdale Quarter, right? They've got all of these things going on.
Right.
When they've got all this new capital, it was okay. We need to put it into something that we can own, and it's going to be a while. And so they're not playing the game of like buy it, sell it. It's not the open door, the iBuyer model where we're going to buy it and then we're going to resell it in the market. I always say that these houses become pixie dust, right? Once the property gets sold to a REIT, it's kind of gone. It never really comes back to the market because it's that long term of a game. We underwrite for these opportunities in our office, and we're underwriting out for 30 years, right? So it's not like we're underwriting it for 5. So I hope we're not doing this in 30 years.
Hopefully you and I are both retired in 30 years, Dan. That's all I'm going to say. Yeah. Well, how could this be helpful for our real estate partners out there?
Yeah, Don challenged me with this question the other day, right? So he came to my office and he goes, well, how can other partner agents play? And I said, well, I think that, from what I'm hearing from agents that are working in the retail channels, they're having trouble at the kitchen table with these potential sellers, right, that are going, where do I go? Like, what if I sell my home now, where am I going to go?
Right.
And so with some of these groups now, what we've been able to do is talk them into the idea that they should lease back, right? So lease it back for either short term, so it could be as short as 6 months.
Right.
It could be as long as a year, right? Where we will take someone and, now they take their chips off the table. They get all of that equity that they really wanted.
Yeah.
And it gives them time to figure out what they're going to do. I mean, who knows? The market could adjust in that period of time and it could shift into a buyer's market like that. So I think, the opportunity for the agent really is the idea that it gives you a message to give your consumer, right? So many times I hear agents, because I get these calls, I own some rental properties, so I get some of these calls of agents and they'll say to me, yeah, I'm an awesome agent, right? Or think about a FSBO. Yeah. I'm a great agent, I prospect in your neighborhood, I know the area well. And there's not a ton of value in that, right? That message, or I think there used to be, but I'm not sure that message carries a ton of weight anymore. But what if you went to these consumers with a message and said, hey, I've got an offer on your home. Right. And this offer is way more than current market value. And they're currently willing to pay well over any potential asking price in market. Now would you consider selling? And oh, by the way, I don't just, I'm not talking about a potential offer. I've got a paper offer I want to bring to you, right? So I think that the conversation just changes when you actually have a tangible offer that you're actually putting on someone's table. And so that's what we do is we provide these agents with a real offer that they can take to the next presentation, or even when they're prospecting and making calls, like, who are you calling? Mm-hmm. Call someone with intent. And I think that that's what our goal is.
Well, and I love that because we were just talking about this on a call this morning, that communication is so important. And having a phone call to go out and communicate that what they can do with those properties is amazing. Right. And being able to stay longer, and there's a story there.
Yeah,
so
for sure.
Love that.
Yeah.
So tell me a little bit about the model and what that looks like.
Yeah. So like I said, I've been doing this for a long time. I know I look like a young pup, but I've been at this for a while. The model right now is more aggressive than I've ever seen it before. Rightfully so, I suppose, with the amount of money in the market. But they're buying, if you guys are familiar with cap rates, they're buying at a 3.5% to 4% cap rate. Right. And when I first started in this business in 2011, we were buying at 8% cap rates. Right. So if you guys
Margins are a lot lower.
remember from real estate school, they told you that the lower the cap rate, the higher the price. Right.
Yeah.
So the lower that cap continues to get pressed, that means they're only making 3% returns, 3.5% returns on these properties. Okay. It's the strongest buy model I've ever seen in the history of these single family REITs. So it's expensive. The other thing that we finally have seen is that they're willing to buy attached product. Right, so there used to be that we would only buy, like if you guys remember, it was always 2018 and newer, or 2000 and newer, had to be a tile roof, or stucco, or something like that. Now we'll buy anything that could potentially be FHA approved. If it's FHA approved, we'll buy it. So it could be a 2-bedroom FHA approved townhome, we'll buy that. That's right, crazy. And so now it's the bandwidth is increased substantially.
Well, and the years built too, I've heard, have gone back a lot further than they used to be too.
1950 and newer, which we don't even have that many homes that are.
I think they didn't want lead paint before, right? They didn't know it was what 19 whatever that was.
Now they're like, we'll take all the lead paint we can get.
They're like, we got it. We'll just paint over it.
Give them all the lead paint houses. They'll buy those. Yeah,
that's awesome.
Yeah,
awesome. So Dan, how can the agents submit offers?
So we made this super simple. We just asked that agents go to easystreetoffers.com. So they go to easystreetoffers.com. There's a button there and it says, are you a seller or are you an agent?
Okay.
And if you click agent and just go through the agent channel, we have a series of questions. So it's a very simple kind of series of questions about the property. We just want to know the property condition. That's the one thing a computer can't tell us is the condition of a home. There's a place for you to upload some pictures. And then that goes directly to our team. Within 24 hours, we'll return you an offer on your property.
Wow.
Yep.
That's fantastic.
Try to make it simple.
That is the true easy button. I love that.
It's the easiest way we figured out to do it.
All about the easy button.
Yeah. Try to keep it easy.
Okay. I know we talked a little bit about leasebacks, but can you tell me a little bit more about the leasebacks and how that works?
Yeah. All of a sudden, this has become like the number one question in our office is like, can they lease it back?
Yeah.
And the answer is of course, we can work out a lease back. There's a couple ways. One is a short-term lease back. Okay. So if it's a short-term lease back, maybe it's just 30 days, right? They've got a home closing or a new build that's closing in the next 90 or something like that. We're going to look at that a lot differently than we're going to look at a 6-month or a 12-month lease back. If we're going to go to a 6-month lease back, we're going to set a price, right? Okay. So we're going to set a price what we believe the market value of rent is today.
Okay.
And we'll propose that after the inspection. So we'll go through the inspection process first. We got to qualify the old owner as the new tenant.
Right.
So they got to fill out a tenant application for us. But once they've done that, we'll present them with our lease price. And once they have that lease price, they can take it or leave it, and we get them the option to cancel the contract if that lease price doesn't meet their needs at that point. So anything 6 months or greater, we're going to set a price for them just post an inspection.
That's so great, because that is one of the top things that comes up today is the fact that they're afraid to sell because they have nowhere to go.
Where do you go?
Like, where do you go unless you want to move in with family, which
Yeah. But I think it gives the agent something to say, right? And so in that conversation, what our agents say, right? I always challenge agents when I'm speaking on this stuff is like, what do you say? Right. When someone says that to you, what do you say?
Yeah.
And what I'm hearing is that they just go, well, I kind of just add them in my database and go from there. But like, offer them some solutions, right? And this could be a solution that they didn't even think they had, right?
Absolutely.
And so you start offering solutions they didn't know they had. You never know. You got a client for life. I think that's how you earn clients.
Yeah. Well, I'm sure our real estate partners out there, Dan, are the praying question of how do I get paid?
Yeah. Do I get paid?
That seems to be important.
Right. Yeah. So we really value our agent partnerships, especially with Venture and Easy Street. We're a brokerage and market. But we only represent the buyer as the buyer's broker. We have no interest in representing your seller as the seller's broker whatsoever. I will say that in every case, we're going to underwrite every property so that your seller is paying you a full 3% commission.
Wow.
Right? So we're assuming that every agent's going to get paid a full commission.
Yep.
If it means that my team needs to take a little bit of a haircut to make that happen, my job is to buy houses. My job isn't to earn commission. So we have a little bit of a different job in this game. And so because of that, we've been really flexible with our agents to make sure that they get paid. I want to make sure that they earn 3% every time because I want their marketing dollars going back out to send us more opportunities.
And every reason to come to you, for sure.
That's the goal. So we're going to work to make sure everybody gets full 3%.
That's fantastic. Awesome.
Yeah.
You know, what do those inspections look like, and how does that affect for closing?
Yeah, we're hearing all kinds of stories there, right?
Yeah,
like
we
what's
are.
going on in the market. So our inspection process is super simple. We have our own construction crews, so they get assigned a date and time that they need to be at the property.
Okay.
So once we enter into a contract, we're going to send one of our inspectors out to the house. It's about a 30-minute inspection. So this isn't a formal home inspection.
Okay.
It's not like a licensed home inspector's going through the house to like earn chips and figure out all the things wrong with the house. What we're looking for is it safe? And is it functionally solid?
Okay.
Right? So do the
Great.
big systems of the house work? The AC working? Is there any plumbing issues? All of these, all the big systems. Nothing cosmetic. So we just simply don't care about anything cosmetic. And the reason is they're just going through it to remodel it anyway.
Right, of course.
So just need to make sure that it's functional. It takes about 30 minutes and then we're out of the house. In some cases, we have to ask for some sort of repair request if there's something we didn't know about in advance, but we try to catch all that stuff in the front end.
Right.
Closings, we can close in as short as 10 days.
Right.
The issue really has been that agents haven't wanted us to close in 10 days. Their sellers need more time, but we can close in as little as 10 and stretch that out. You know, we have some now that are being stretched out over 90 days so that sellers can find other homes. So willing to work with agents on close dates and inspection times to make all of that happen. And obviously we're waiving appraisals because it's all cash.
Right. That's fantastic.
Yeah.
Well, guys, contact Dan Noma today and Easy Street Offers. Thank you for joining us, Dan.
Thanks, Sharon. See ya.
And I'm talking while I'm muted. So, but I like the hand signals, though, Sharon. They come in very handy.
Yeah.
I was trying to say it even though I was on mute. I'm like,
Yeah, I can translate the Italian hand signals. So,
Awesome.
and that was a great interview and a great conversation. And Dan, you're here with us now, so thank you so much for joining us. I want to, before I forget, I want to let everybody know I am adding into the chat on Facebook and YouTube a link to essentially a fireside chat that we're doing with Dan next week. We've got a couple of them, and we might even actually be adding one the following week as well to get involved and ask Dan more questions and to be specific about that. So.
guys, you're gonna like jump on that, getting signed up, because the reason we're adding the third is because there's such a demand to be on here, and we are limiting how many people. So
yeah. So Dan, we know you're busy. We know you're coming from another Facebook Live. You know, you're in demand everywhere. But watching that video, I think there's so many really great points that were made. The ability to lease back a home for a seller is really important. You made the point of like if they're waiting for the new build to be completed or something like that, and there are a lot of stuff. And I see somebody's actually commenting in the comments right now asking for information on getting a property to you, Dan. So and I'm gonna put that up here in a second, but. I just want to make sure that we address that issue as well. How important it is to know that this is a great solution for people who are selling and maybe are trying to juggle through some time frames as well.
Yeah, awesome. Thanks, man. And I mean, to find us, obviously, you guys know where to find us. EasyStreetOffers.com. They can submit their properties there. And I mean, we've been working through all kinds of scenarios with different seller stuff that I've never seen in my career dealing with this is just timeline issues, being kind of number one. They need to close, they need their money, they don't want to move out yet. We're working through a lot of those right now. So a lot of the short-term lease backs, we've been working through that to make sure that consumers are moving seamlessly into their next destination property, making the lenders' jobs a little bit easier on some of these timelines that they're met with. It's like, we have this conversation a lot about just unlocking the contingency for the seller. And I'm not suggesting we're the end-all be-all solution for every consumer or any client. But I think what's important is like if you propose the solution to your clients and have that conversation, you might find that they have some needs that they just didn't tell you about before. Like the last conversation I was just having was with like an Open Door, and we were talking about iBuyer, and one of the flexibilities that they offer is that, that late checkout program. And it isn't until like my agents start talking about that late checkout program that I realized that the consumer has no idea that that's even a problem for them, right? They didn't even know that moving twice was a pain, and they hadn't even thought that far down the road. And just by having the conversation that like, this is going to happen, we know this is going to happen in advance, has freed us up a little bit. Later on, even if they choose to list the property traditionally and sell to a retail buyer, at least now the conversation's been had. It's made my agent's job a little bit easier by just having those conversations.
Yeah. And I think that there's so much for that, because that's the biggest concern so many people have is, where do I go next? And so I've got a couple questions that I'm seeing in the comments. So I want to make sure I run those by you, Dan, because we don't have a lot of time, but so asking about agent commissions, and I know you talked about that in the video a little bit, but she mentioned that she may have missed that in there. And so that's all part of the original offer, right? The commissions are just like a traditional deal would be. And I think that's important for people to understand, because you and I have done a lot around this in the past, and that's an area where kind of people get hung up. But if you were selling a house, if you were listing a home, your commission is built into that net. Now, by being represented by an agent, typically you are pushing that net up, and that it still works out very beneficial to the homeowner to have this representation when they have somebody who knows how to help them navigate through that process. And usually we're going to see those homes sell for the best possible price as well. Yeah. So, but it's built in just like what we would normally see in a traditional transaction. Correct, Dan?
Yeah. It doesn't cost them any more, and it doesn't cost the agent anything to leverage us. They can earn a full fee if they submit a property to us. So we underwrite it, assuming that they're going to get a full 3% commission. On the listing side, we're going to represent the buyer's broker. And I'll tell you guys, like, we do work with consumers directly, but our best transactions are when there's another agent involved. So our preference is to work with a listing agent, especially as we're navigating the kind of trying times that we're dealing with right now. So our job is much easier if we have a listing agent on the other side.
Yeah, excellent. Yeah. Okay, they're also asking what if they needed a 90-day lease back? Is that in the realm as well?
Yeah, we're actually looking at right now we're at 90, so we're approved up to 90, so I can go out to 90 right now without additional approval. I've gotten a few pushed through that are up to 6 months, so we've even pushed a few out to 6 months. So in a lot of those cases, like we want to close it as soon as we can. We'll probably put a lease in place that is market, so they might pay exact market for the rent, and as long as we're there, the timeline is kind of irrelevant at that point. So we just want to make sure we get them through the deal.
Yeah, and I think that it's important to look at this as another tool, right? And Dan, thank you for yesterday, the list you provided. You and I were talking earlier in the day about how I had these different lists. Well, the list that you gave me with all the matches, we ended up going through about 75% of that list last night, because people are like, oh no, that's the information I want. Yeah. And there were multiple appointments set, So like I mentioned the event that I've got coming up with Amber, and if you'd like to participate that on April 12th, then I will have those kind of lists from Dan. These are specific properties that are identified as likely sellers, that we have phone numbers, email addresses for, and that Dan has somebody who's ready to write an offer on that property. And so we actually give you the numbers as well, what that would look like, that offer would look like, help you get your foot in the door. And the reality is that if that person says, well, you know what, I'd rather go to the market and see what happens there, that's okay too, right, Dan? We're good with that. We're looking to have an at-bat if we can make it happen. But if they want to go and they want to put a sign in the yard, that's good too.
Yeah, we just want to have open the door to conversation. I mean, what I've learned through all of this, working with iBuyer and all of these texts is, look, it's a way different conversation when I call up and I'm like, hey, I'm Dan Noma. I'm a great real estate agent. You should list a property with me. Or if I call them and go, hey, I've got a buyer that wants to buy your house, and that this is exactly what they're willing to pay you for your house today, which is like more than market value. This might be the greatest time ever to sell your house. It gets me to the door, right? So, what Don's working on is just to help you guys get your feet under the kitchen table. Whether or not our offer gets accepted or not, obviously I'd like some of them to get accepted, but if they don't, then at least we helped you do a transaction, and maybe you'll think of us on the next one. That's kind of our thinking with it.
Well, and they're good offers, Jen. It's not like, I think the perception in the past was that they were, low ball off, you know what I mean? Like they're aggressive, good offers. So
yeah, we can't buy a couple hundred homes without being overly aggressive right now.
Right.
We have to get really aggressive with them.
Yeah.
In fact, if you guys want, I've got how much time you got, Don? A minute?
We got about 5 minutes left.
Okay, let me show you something quick. So I got some cool charts. Can you guys see that okay?
We can now.
Yep, we can see it.
So check this out. So this is so John Burns is an economist. So the John Burns, like national housing data, they track all kinds of different things. So every month they come out with like a slew of reports and charts and things. And in this chart, what we're talking about is the total investor share of home purchases last month. So this is last month total investor share of total home purchases in these markets. Look at us. We're 30% of the market.
Wow.
Right. So this is not just me, right? Like I'm not coupling me in that, but like there's other investors in market, but 30% of transactions are being sold to investors in market today. This is a current percentage above or below the subprime peak. So like 2006 subprime peak, right? That number that we always look to. Where are we at compared to that? We're still below that number. So we're still actually below where they were buying at that time, right? So we still haven't even close to seeing the peak. Like 7% in this market is a significant run up. It's going to take us a few months to get there. So this is not coming to an end anytime soon. And then kind of coupling that with like flipped home transactions. So these would be iBuyers or people that are buying homes, flipping them, putting them back on the market. And you can see how their numbers are actually down, right? So now that what we're seeing is that there's a huge influx of capital that's looking to buy homes and rent them, and maybe less interest in the idea of buying home, turning it back out into the retail market. So I think opportunities there, if agents want more information or learn more information how to play this, I always say like follow the money. And I can tell you that the money's up here with these guys buying that are buying 30% of the market. These are all rentals is what's happening in our market.
When I was with the group last night that we did the dialing with, one of the things that I explained to them is that these offers, so ultimately your job, Dan, is to buy homes for these investors, right? Yep. That's ultimately and you can't do that if the offers are not competitive. And so when people think that these offers are going to be lowball offers, and when you are making calls about this, it's important to say that these are very competitive, very aggressive offers. Because when people hear cash offers, a lot of times they think that it's going to be lowball. Maybe a little bit less right now because we're seeing so much cash in play, that's happening. But it is. But I think it's important to differentiate that as well. That these are typically above what would be market value.
Yeah. I mean, it's the yield is lowest I've ever seen it. When I started working with institutions, we were buying a double-digit yield. So we were buying at like 10% or 12% yields is what we were returning to the investor on those properties. Today, I'm buying assets at a 3.5% yield. So my margin of error is like that, right? So like if I mess anything up on a renovation cost or I'm off on rents a little bit, Wall Street's coming and knocking down here in Scottsdale, but it's made our job a little bit more difficult. But it means that the interest is there, and they've caring less about the big return, and they want to play the long game, and they're just buying yield. That's all these big banks are doing is just buying yield.
And then, Dan, you were saying yesterday that some of them are actually starting to incorporate the appreciation into what they're looking at in these numbers as well, which helps their ability to be more aggressive.
Yeah, I mean, year-over-year appreciation is something that we used to ignore in real estate fundamental models. Like we would say, if it doesn't rent, regardless of appreciation, we should just not buy it. And now for the first time ever, we're starting to see institutional money say, we should factor appreciation, and we're going to make that part of the buy model. So now, where I used to be able to buy a 6 cap, I can buy a 3.5 cap because we're factoring in home price appreciation year over year to buy these houses. And it's a significant shift. And the thing I've been pointing out to a lot of people is the reason that these guys are jumping in, and Amber probably knows about this too, but like these big institutions used to buy bonds. So they used to buy mortgage-backed securities and bonds and all of these things up in the open market. That bond market's basically dried up. There's not a lot of yield for them to buy in that market. There's just nothing, there's no return. So you're having groups that never thought they were going to buy real estate that are now looking at real estate and single family homes specifically because they're getting the best yield in those markets. And the thing I'll tell you is, like, Wall Street banks, any of these guys, they'll buy a bucket of bananas if it makes money. Right now it's real estate, and they're going to buy a lot of them. So I think it's an interesting time to play the game.
Excellent. Well, Dan, our time is up. I know that was rushed, but the great news is that that we are going to have next week. We've got 2 days, I believe, on the 4th and the 5th, that we are doing a chat with Dan. So an opportunity to get in there. Sharon will be moderating, and an opportunity to get in there and ask your questions and get clarifications. Get involved with how you take this in your business and you grow your business. So on the 4th and 5th, and it looks like we're probably adding another date for the following week. So make sure you get RSVP'd. If you have questions on how to do that, reach out to Sharon or myself, and we are happy to make that happen. Mindy, Amber, Sharon, Dan, thank you. All of you guys watching, I appreciate you guys so much for taking the time to spend with us on these Thursdays. We will be back next week and have some more great information. So thank you very much.
Thank you.
Thanks, you guys.
Thanks.
Bye. Bye.